Hello guys, this let us start the analysis for today. Yeah, hi friends, let us start the analysis for today, which is 3rd May on Nifty chart for 5 minutes candle time frame. Uh, Before that, as we generally do, let us mark the previous day important levels. This is PDL, previous day low. This is PDH, previous day high. And previous day was kind of sideways day. So then, whenever there is a sideways day, the next day CPR is narrow. So if you see here, today's CPR is very narrow, too narrow. Narrow CPR looks like this. The three lines are very close to each other, and average to wide CPR looks like this. So on the narrow CPR day, usually it is a trending day. So let's start with this analysis. The first candle, which is a doji candle, it means it is neither bullish nor bearish, neither green nor red properly. So in this case, this is indecisive candle. So there is no trade on the first candle. As I told you previously in one of the videos, that whenever such setup happens, like the first candle opens above the PDH, and if it is green, then you can go long. But this setup doesn't happen here, so there is no entry on the first candle. Second candle also could not break the top. Third candle has broken the top. Now here I will tell you something. This candle has broken the important level. This is not just pivot, like this is not only R2 resistance, but this is also all-time high. If you see here, this third candle has broken that, and in generally we should go long here. Usually we should go long on the third candle, but here um, this is a low probability, and why it is, I'll explain you. As I explained in my previous video, uh, see this 20 EMA blue line. This acts as an important indicator in the intraday trading, because um, this this is like a rubber band. As I explained you earlier, candle always has a tendency to go towards the 20 EMA, and then it retraces back, and then again it can go away. So whenever the candle, like suppose this candle closed here and you want to take a trade here, see this level, the top level, this level to this 20 EMA, how far it is. Whenever it is too far, avoid taking trade, because candle will always try to go near this 20 EMA. This is a very important, you can say, secret, which you should know while trading, and which trade is low probability, which is high probability. You will analyze accordingly. Now, if you are not going long here, even if you go long here and you keep your stop loss, this stop loss will hit with the next candle, which indicates a false breakout. Now, this is very important. Narrow CPR, it's a trending day, big trending day, but we don't know whether it is upside or downside. Now, this fourth candle is a confirmation that it will go downside, because this fourth candle is a false breakout from the important level of all-time high and from the first candle high also. If you see the first candle, which is here, this first candle low and high is very important always. In any day, first candle high and low is important, and this is a proper false breakout. And then you can see how nicely it's reversed, and it reversed huge. So if people are going short here, they would have made a huge profit. Again, if you miss this trade, the next trade is Whenever I told you, the candle will come back and retrace to 20 EMA. Now in this case, when it is broken here, you can see there are two things. One is to risk reward. If you enter here, your stop loss on top, then two times the stop loss is your target. Somewhere here is the target. Twice your stop loss is a target, or the next pivot or next resistance or whatever next indicator is your target. So this pivot is your target. So once you're out of this, but you think that okay, this will go on, that is called riding the trade. So you have to ride the trade whenever this narrow CPR happens. How to ride this trade? By trailing the stop loss. Trailing the stop loss means now here your stop loss was here, your target is hit. Now you exit, no problem. Or if you don't want to exit, what you do, you move your stop loss to here. You know, when you move your stop loss to here, even if your stop loss hits, you will not make any loss. You will even make a profit because you entered here. So you move it here, okay, your stop loss doesn't hit. When this candle gets completed, you move back to this point. So this is your next stop loss. So already you have achieved your target. Now even if your stop loss gets hit, you will be in profit. Again this third candle, okay, you put your stop loss here, again here you put your stop loss here. So I think where your stop loss will hit, your stop loss will be taken by this green candle here. Even your stop loss is hit here, what will happen, you have already made this huge profit from this top, from this candle bottom till here. This is called riding the trade, going with the trade. And it can happen that you take your stop loss, get out of the trade. Now as I told you, it retraces back to 20 MA and it is a trending day. So you can enter here again because this candle has broken 20 EMA and the next candle has reversed. So it can be treated as false breakout or 20 EMA retracement trade. Enter here, stop loss here, and take twice. So you can exit somewhere here. Okay. So this is how you should trade with 1:2 risk reward. Every candle will tell you something which you need to understand with the stop loss, and this is a pure case of stop loss hunting. Like people who have gone long here on this candle, their stop loss got hit, and on the first candle also there's somewhere here the stop loss is there which is taken by this candle. So once the direction is confirmed, you can trail your stop loss and continue on the trending day with a big profit. See, you should remember in the trading, intraday trading, always lose small and win big. On such days, if you take a proper trade and exit at a proper location, you may earn, like, sometimes the full month's income can be um, earned in the same day. But you should know where to trade, where not to trade. Like yesterday there was no trade, so you saved your capital here. Today you get a huge profit. So whenever there is a proper entry, that time only you should trade. That is how trading works. Every day is not a trading day. You should know where not to trade, and you should know where you should do position sizing. Today you should do position sizing, means if you are sure, you should go with bigger capital, so you'll earn more. If you are not sure, you should downsize your positions, like if you are taking 2 lots, 4 lots, 6 lots, 8 lots. So depending on your capital, on such days, trending days, if you are sure, you can go with bigger lots to earn big money in just no time. This is how trading works. It's lucrative, but you should be disciplined. You should take the trade only when your setup is formed. You have certain setups, you have logic behind it, how the stop loss hunting works, where is the support, resistance, where I should go long, where I should not enter. When there is a control in the trading, uh, you can do wonders. Now, one more thing. When there is a um, okay. Hmm. This weekend, like Saturday, Sunday, I'll come up with some videos to explain on the patterns. Like there are different patterns. There are like every buddy, they have their own setup through their experiences. There are books. There are a lot of patterns for this trading. But what I did, I have summarized it into only three patterns. Like any pattern can be categorized into three patterns. One is breakout, fake breakout, and reversal. Any pattern you can categorize into these three, and it becomes very easy. So whenever breakout happens, you have to understand. Whenever false breakout happens, you have to um, know that. And when is the reversal? If you understand these three things, you we can like trade any pattern on this logic on any given day with a proper risk reward. Okay, that's it, guys. Thank you very much. Bye bye.